Every time volatility spikes, one name shows up.
BlackRock is an extremely dangerous company.
They have that much control to get everybody to do what they want them to do. Larry Fink, the guy running BlackRock, is really the president of the United States.
Its reach is staggering. $10 trillion assets under management, clients in every industry, a front row seat to corporate decision-making. And at the center sits BlackRock's Aladdin, the risk management system. People whisper about it like it's a brain plugged into Wall Street. Some call it a glorified spreadsheet. Others say it's the closest thing finance has to mission control. Both can be true. By mid-2025, BlackRock's assets under management hit roughly $12 trillion, more than the GDP of almost every country on the planet. Their secret weapon is an investment management technology so powerful it makes your favorite AI tools look like a child's toy. Imagine what a system could do with 25 years of financial data and the ability to predict the future of the market even before it happens. That's BlackRock's secret weapon, Aladdin AI. When crises hit, governments and central banks don't just call anyone, they call one person, Larry Fink, CEO of BlackRock. They say Larry Fink, often tied to shadow banking BlackRock, and he has more power than the President of the United States. But that's just the public story. Some even call it a BlackRock conspiracy. The truth is much deeper. BlackRock isn't just buying companies anymore. They're taking control of the very bloodlines of the global system. We're talking pipelines, shipping ports, runways, and the data that flows through them. They've started executing their $68 trillion game plan.
The United States, think of this, spent more money than ever spent on a project before and lost 38,000 lives in the building of the Panama Canal. My administration will be reclaiming the Panama Canal, and we've already started doing it.
BlackRock strikes deal to bring ports on both sides of Panama Canal under American control.
Trump wants to reclaim the Panama Canal. And while the world is focused on the headlines, most people have no idea what's really going on behind the curtain.
This is the story of how a single company is quietly taking over the world with an AI tool not available for common people like you and me. What kind of man builds a portfolio management platform powerful enough to sway the US government? To understand BlackRock, we first need to understand Larry Fink, the man who built his empire from a scar.
Reporting for Springfield Station, Springfield, Massachusetts, and while
the NASDAQ, everything and more.
Born in California to a shoemaker's family, Larry wasn't chasing counterculture like other teens. In the late 60s, his obsession was power. At UCLA, he studied political science, but stumbled into real estate classes that shifted his focus from politics to finance. By his early 30s, armed with an MBA, he walked onto Wall Street with one mission: climb to the top. At First Boston Corporation in the 1970s, Larry found his edge. He pioneered mortgage-backed securities, bundling home loans into products that investors couldn't resist. The American dream, sliced and sold as profit. The innovation made him millions and turned him into the youngest managing director in the firm's history. Whispers even named him a future CEO. But ego and ambition are dangerous on Wall Street. In the mid-80s, Larry bet big on interest rates. When they plunged instead of rising, his hedge, built on a tiny calculation error, collapsed. The cost? $100 million lost in a single strike. Overnight, he became an outcast. Despite earning billions for the firm, Larry Fink's career was shattered. Jobless, humiliated, but not defeated, this scar would become the blueprint for the empire he was about to build. But how does a fallen trader with a ruined reputation rebuild into the most powerful institutional investor alive? The answer begins with risk management.
We should have been fired a year ago and a quarter ago before the loss. We were making so much money, and we had no idea why we were making so much money. We had just extraordinary risk.
Risk had destroyed Larry's career, but instead of fearing it, he turned risk into his greatest weapon. Larry's fall taught him one lesson: risk must be mastered, not ignored. From then on, risk management became his obsession, the foundation of everything he would build. To rebuild, Larry assembled an elite team of 8 traders. The missing piece was capital. That's when he met Stephen Schwarzman, co-founder of Blackstone. With $5 million in seed money for half the company, they launched BlackRock, founded in 1988. From day one, BlackRock's pitch was clear: manage bonds and fixed income assets while embedding advanced risk management system analysis into every decision.
Investors had no idea the risk they were taking, and there was a great need for a company that starts off with a high concentration in risk analytics.
Unlike other firms that treated risk as an afterthought, BlackRock put it at the core. The idea spread quickly. Within a year, they managed nearly $3 billion. By 1994, that number had soared to $50 billion.
Secret to success is a massive computerized system called Aladdin.
The secret behind this meteoric rise, a system called Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network. More than just software, Aladdin became the brain of BlackRock. It could run Monte Carlo simulation after simulation in seconds. What if interest rates rise? What if mortgages default? The answers came instantly, giving clients an edge in turbulent markets. Its first real test came during the 1994 bond market crash. While Wall Street bled, BlackRock survived with minimal losses. Clients realized it wasn't luck. Aladdin had flagged the risks early. From that moment, BlackRock earned a reputation. When markets turn chaotic, they're the firm you call. Some even whispered, "Does Aladdin control Wall Street?" But success came with conflict. Fink wanted to reward talent with ownership, while Schwarzman resisted giving up his share. The partnership fractured.
Economic arrangement which ended up being inappropriate for a business that was growing as rapidly, needed to add as many people, and I made a mistake. I took the original agreement. I didn't want to change it, which was advantageous, for my side.
Schwarzman kept Blackstone. Fink took BlackRock and complete control of the empire he was building. What happened next would transform BlackRock from a rising star into one of the most powerful and controversial forces in global finance. And this was only the beginning.
Do you think there's profit as a motive to have this war and continue the war?
Because BlackRock was about to step onto an even bigger stage, one that would shake governments, markets, and ordinary people alike. In 1999, BlackRock went public, and its growth exploded. The secret weapon was Aladdin, once just an internal tool, evolved into becoming the industry standard for risk analysis, sold to banks and rivals alike. By the mid-2000s, over 200+ institutions using Aladdin trusted the portfolio management platform to run their books. For BlackRock, it was more than software. It was a money-making machine. At the same time, Larry Fink went on a buying spree. BlackRock expanded from bonds into stocks, hedge funds, and global platforms. It became a one-stop shop for the world's biggest investors. But the real turning point came during the 2008 financial crisis.
There are fears the sell-off will continue on Wall Street.
It is definitely a very, very difficult time, and it's not going to get better quickly.
We are watching this market deteriorate. The stock market is now down 21%.
Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending. Credit markets have frozen, and families and businesses have found it harder to borrow money. We are in the midst of a serious financial crisis, and the federal government is responding with decisive action. So I propose that the federal government reduce the risk posed by these troubled assets and supply urgently needed money so banks and other financial institutions can avoid collapse and resume lending. This rescue effort is not aimed at preserving any individual company or industry. It is aimed at preserving America's overall economy.
As an expert on mortgage-backed securities, he was called in to help and to clean up. There was a day in which Geithner called him 21 times in a day.
Mortgage-backed securities, the very products Larry once pioneered, had poisoned global finance. Banks collapsed. Bear Stearns lost nearly all its value. Lehman Brothers vanished. But BlackRock, wary from Larry's past, had kept its exposure limited. When Barclays needed to offload assets in desperation, Fink saw his moment. For $13.5 billion, BlackRock acquired Barclays Global Investors, home to iShares ETF Dominance, the largest provider of exchange-traded funds. That single deal made BlackRock the world's biggest asset manager. ETFs gave BlackRock quiet power. By holding slices of nearly every major companies, including some BlackRock Fortune 500 ownership stakes, the firm gained voting rights over decisions that shaped industries, from executive pay to corporate policies. Yet legally, BlackRock was still just a passive investor, managing other people's money. That technicality gave them influence without accountability, and the crisis only deepened their reach. As banks and governments scrambled, even the Federal Reserve BlackRock contracts gave Larry Fink direct influence over national rescue plans to analyze and value toxic assets and steady collapsing markets. The result? While Wall Street staggered, BlackRock emerged stronger than ever. With allies in Washington, trillions under management, and the trust of governments, Larry Fink, most powerful, finally achieved what he always wanted. Not just wealth, but global influence. Power without politics, authority without a vote, but power always attracts scrutiny, and soon Washington would come knocking.
No federal or state public official had any idea what was going on in those markets.
I was really upset about what went on Wall Street that brought about the financial crisis. Not only almost destroyed the financial system of the United States, almost destroyed the financial system of the world.
After the financial crisis, the US government is forced to act. Wall Street's biggest players had done too much damage to everyday Americans. It was time to clamp down on them. Time to send shivers down the back of powerful Wall Street executives. Rules were passed and regulations tightened, at least for some.
The centerpiece was the Dodd-Frank Act, which introduced the label "too big to fail." Banks deemed systemically important faced strict oversight, costly reserves, and heavy compliance. But what about BlackRock, the world's largest asset manager? Surprisingly, it escaped the label, while big banks were shackled with rules. BlackRock worked quietly in Washington to carve out a loophole. Behind closed doors, Larry Fink, CEO, met with leaders, even President Obama, to argue that BlackRock posed no systemic risk. The lobbying worked. To this day, BlackRock has avoided the too big to fail designation. The reason lies in a technicality. BlackRock is considered a passive investor. It doesn't invest its own money, only its clients' funds. That label shields it from the strict rules others face, while still giving it enormous voting power in boardrooms across every industry. This influence goes beyond avoiding regulation. BlackRock has mastered the revolving door between government and finance. More than 100 officials had moved between BlackRock government contracts and top institutions like the Treasury, the Federal Reserve, and the SEC. Former executives shape policy from inside the government, while ex-regulators return to BlackRock with insider knowledge. Globally, the pattern repeats. At least 80 former officials worldwide have passed through BlackRock's ranks. The result? BlackRock doesn't just follow the rules, it helps write them. With allies in both parties, ties across continents, and alumni in the highest offices, the firm has built a shield of influence few can match. And yet, critics warn, when one company holds this much sway over markets and policy, the system itself starts to look less like democracy and more like financial system control from behind the curtain.
There is the potential for abuse too. People with experience could conceivably move into government, create regulations or create precedents that would favor their prior employers, and then turn around and go back to their prior employers. That's possible.
They say global finance runs on Excel. Today, it runs on BlackRock Aladdin. What Windows is to personal computing, Aladdin is to Wall Street. Only here, there's no rival. Even BlackRock's competitors, Vanguard and State Street, depend on it. By 2020, Aladdin tracked $21 trillion across 240 clients, nearly 10% of all global financial assets. And its reach doesn't stop with private banks. When crises hit, public institutions, the Federal Reserve, the European Central Bank, Japan's pension funds, turned to BlackRock too. During the 2020 pandemic meltdown, the Federal Reserve hired BlackRock to run its massive bond-buying program. Governments effectively outsourced their real-time risk monitoring to one private company. That dependency raises uncomfortable questions. If the world's markets run on BlackRock's Aladdin, who regulates it? Who ensures BlackRock doesn't use its insights for itself? The answer is no one. Aladdin is a black box, unchecked, unregulated, but indispensable. And at the top of this system stands Larry Fink, the most powerful leader.
You have to force behaviors, and at BlackRock, we are forcing behaviors.
For years, BlackRock operated quietly. Few outside finance even knew the name. But by the late 2010s, protests erupted. Critics accused BlackRock of fueling climate destruction by investing billions into oil and coal. Activists swarmed offices. Newspapers labeled Larry Fink a climate villain. Fink responded with a bold rebrand: ESG.
Environmental, social, and governance. And the idea is that there are specific issues, whether it has to do with climate change or whether it has to do with boardroom diversity, that are important issues for investors.
Larry Fink declares sustainability, diversity, and climate action as BlackRock's core investing principles.
For a while, it worked. BlackRock was praised as the conscience of Wall Street. Fink warned CEOs, go green or lose BlackRock's support. Suddenly, the firm wasn't just managing money, it was reshaping corporate priorities. But backlash came fast. Environmental groups accused BlackRock of hypocrisy, pointing out its fossil fuel holdings. Conservative leaders blasted the firm as the face of woke, capitalism, and ESG investing backlash. States like Florida and Texas pulled billions in protest. By 2023, BlackRock quietly backed away from its boldest ESG commitments. References to stakeholder capitalism, ESG faded from its documents. Support for climate proposals collapsed. Larry Fink himself admitted he no longer wanted to use the term. What was once a promise of moral capitalism now looked like a marketing strategy. And yet, BlackRock didn't retreat out of weakness. It was simply moving on. ESG had become a distraction. ETFs had matured. The firm was preparing for its next move towards something far more tangible, essential, and profitable than moral branding, something that touches every corner of modern life. And when backlash came from both activists and politicians, Larry Fink faced the hardest question yet. Was ESG a movement or just marketing? And recently, its influence has reached even the battlefields of Ukraine.
They appear to show Russian forces executing a group of Ukrainian soldiers who had just surrendered. See those bodies there? It comes as a ceasefire appears to be even further away after Trump's 2-hour call with Vladimir Putin.
Amidst all this chaos, one name keeps popping up: BlackRock. Why is BlackRock, a Wall Street giant, so deeply involved in what's happening in Ukraine?
Only months into the war, Larry Fink struck a deal directly with President Volodymyr Zelensky. Together, they launched Ukraine Development Fund, with billions from global donors and institutions like the World Bank. The promise? To rebuild Ukraine once peace arrives. But critics ask, is this about helping a nation recover, or about securing a new frontier for profit? The answer lies in BlackRock's long-term strategy. This isn't just about Ukraine, it's about infrastructure, the backbone of modern civilization. By 2040, the world will need $68 trillion in new infrastructure: roads, ports, power grids, hospitals. And BlackRock wants to own as much of it as possible. Traditionally, these lifelines, water systems, airports, schools, were run by governments. Now they are increasingly shifting into private hands.
It's just invested in financial assets. What they did was actually pretty far removed from our daily lives, the daily lives of most individuals. But once asset managers are owning and controlling the houses in which we live, the roads on which we drive to work or pay tolls, the hospitals in which we're being treated, the schools in which our children are going to school and so on, then they potentially have a far more significant and far more direct impact on the daily lives of large numbers of people than they did back in the day.
And Larry Fink is just getting started.
We believe infrastructure is only at the beginning of a real major asset class. There are structural demands that are going to increase the issuance of more and more infrastructure.
Because infrastructure offers something Wall Street loves: monopoly, power, and guaranteed demand. People can choose a phone or a brand of soda, but not where their water comes from or which airport they fly through. To BlackRock, this is the ultimate prize. Whoever owns these assets doesn't just make profits. They control the essentials of everyday life. Some critics call it financial markets manipulation on a global scale, and that control is expanding fast. In 2025, a $23 billion deal was announced to place the Panama Canal's key ports back under American influence. The effort wasn't led by Washington, it was spearheaded by Larry Fink and BlackRock. If the deal succeeds, two of the world's most critical trade choke points, Balboa and Cristobal, will fall under BlackRock's watch. And the implications are clear. Food prices, fuel shipments, even global supply chains could be shaped by one economic puppet master. Infrastructure is more than concrete and steel. It is the hidden bloodstream of modern life. And now, one Wall Street titan is quietly taking control of it. The United Kingdom is the best example where the public paid the price. Water privatization there left households paying higher bills for dirtier water, as profits were prioritized over maintenance. It showed how fragile essential systems can become once handed to private owners. Now, BlackRock is executing its $68 trillion infrastructure plan. In January 2024,
BlackRock has agreed to buy Global Infrastructure Partners, or GIP, for about $12.5 billion. Now, the deal is the firm's largest acquisition since its 2009 purchase of Barclays Global Investors, putting the asset manager on a path to becoming the biggest provider of exchange-traded funds.
The purchase instantly gave BlackRock control of about $150 billion in ports, airports, pipelines, and power plants worldwide.
Do you think there's a motive of others to have war because now they can raise money and come in and build infrastructure and make more money? Do you think there's profit as a motive to have this war and continue the war?
On the surface, it looked like just another business move. In reality, it was part of a much bigger play. Wars and disasters create enormous rebuilding opportunities. Airports, bridges, grids, and railways destroyed in conflict need reconstruction. And BlackRock is positioning itself as the gatekeeper of these projects. Ukraine may be the first major test case, but it won't be the last. Every future conflict or disaster becomes a potential catalyst in BlackRock's $68 trillion gold rush. Critics warn this creates a troubling cycle. BlackRock already profits indirectly from wars through its massive holdings in defense giants like Lockheed Martin and Raytheon. Now it stands to profit again from post-war reconstruction. In other words, weapons build destruction and reconstruction builds profits, two sides of the same coin. Some even call Aladdin its secret weapon, a corporate surveillance machine hidden in code. BlackRock rejects these claims, insisting it simply tracks the market and doesn't choose where the money flows. But its past actions show that when it wants influence, it takes it. Infrastructure ownership magnifies that influence further. Once a firm controls water, ports, or energy systems, communities can't simply switch providers. These are natural monopolies, and with them come power few can rival. Supporters argue BlackRock's capital brings much-needed investment to fragile regions, but skeptics see something else, a system where risk is passed to the public while profits flow to private hands. Governments guarantee returns, taxpayers bear the cost, and BlackRock secures long-term control. And that's the unsettling truth. BlackRock isn't just a financial giant. It's an invisible force shaping the systems we depend on every single day. From defense to renewable energy, from digital networks to ports, BlackRock is positioning itself to profit in war or peace, growth or collapse. At the center of it all is the same guiding force that has always driven the firm: money and the relentless pursuit of more. The real question is not whether the BlackRock monopoly will shape the future, but how much of that future belongs to them, and how much will be left for the rest of us. If you found this story eye-opening, make sure to like this video, subscribe to the channel, and share it with someone who should know about it. Your support helps us bring more stories like this. You've been watching Oi Life, where we dig deep into business, technology, and money. Things that rule our lives. Stay curious, stay bold, and I'll see you again soon.